Hello, welcome to another episode of Test, Optimize, and Scale. I've been looking forward to today's show. Rodman Schley is here with us today, CEO of Evolve X Capital, Emmy-nominated host, executive producer of Urban Conversion. I'm barely scratching the surface on Rodman's intro here. Rodman, excited to have you on.
Yeah, it's great to be here, Jason. I know we set this up a while ago. It's here. Glad to be in studio, and it's just great to be on the show.
Absolutely. Absolutely. And I know you've had such a multifaceted career, real estate, entrepreneurship, entertainment. We'll be able to talk about capital raises and other things that have opened up to audiences recently. But thought we'd begin with your background, your history, speaking to all the things that you've done.
Yeah, definitely a lot of layers to what I've done in life, but I've enjoyed the journey, that's for sure. If you wanted to think about what am I just in general, I mean, entrepreneur is a great word, right? An entrepreneur is somebody who does do a lot of things. They just pick the vehicles that they want to succeed with, or that they want to go out into life and put it into the world. So I always, whenever somebody asks me, they go, Rodman, what do you do? It's the toughest question that I can ever answer. But I just say I'm an entrepreneur. And, you know, the majority of what we've done in life has been real estate related. I've so enjoyed the real estate career, so enjoyed investing, so enjoyed being a part of the valuation industry. And so, you know, my primary vehicle as an entrepreneur has been real estate. But yeah, we had a television show. We've got a national television show on PBS called Urban Conversion. It's all about sustainability in urban areas. We're also in the process of shooting a pilot for another television show about short-term vacation rentals. So we're shooting the pilot for that this December 2022, and really excited to get that one out there. I think we're going to have another outstanding show to put that feather in our cap with.
So valuations, real estate investment, started building your successes, seeing what worked and what didn't work in different markets, and that navigated you to short-term rentals. I thought we'd speak to that a little bit. For any uneducated members of the audience that want to get an understanding, also for short-term rental investors that want to see, you know, what's at the forefront right now. Why short-term rentals?
Well, you know, when I started my career in real estate, I was 18 years old. I was in college. And so what I started out doing is I used to buy and flip properties while I was going to college. So I'd go to school, I'd go to class, get done with class, I'd go out and fix a property, put it on the market, flip it. And that's how I was paying for my school. And the thing about that, though, is when you're buying and flipping, there's no passive income. There's no passive revenue. You're buying, you're fixing, you're flipping. You're finding the next one, and it's kind of a rinse and repeat kind of thing over and over again. But later in life, as I started to grow and develop as an entrepreneur and an investor, what I did is I figured out that, well, why not take these formulas and still get good pricing on the home, still do a fix if you needed to do a fix, but then put it into a passive revenue stream so that you can build passive revenue so it can consistently bring you income instead of just buying, fix, flip. It went from being a job. When you're buying and fixing and flipping, it's a job. You're constantly looking for that next deal. You're constantly looking for that next flip. But when you're looking at investing in a passive revenue source where you're renting, say the short-term rental program that we're looking at right now, we've got a private equity fund that we've started. We're doing a $50 million raise. It's going very well. But this raise is going to be specifically for vacation rentals because you're buying. And matter of fact, it's a great time to be buying right now. If you're looking at where the market conditions are, so many people come to me and say, Rodman, the interest rates are going up. You know, it's not a good time to be buying real estate, but it's totally the opposite, especially if you're in a really good cash position right now. Because what's happening is you're seeing in the market, because interest rates are going up, affordability is going down significantly. So the folks that have that, I have $1,500 a month to make a house payment, and that used to buy them, $400 some thousand in house with a 30-year loan. that same $1,500 a month right now is buying them under $300,000. I think it's right around $280,000 at home, right? So all of a sudden, the number of people that are going out and buying homes has come down significantly. The inventory is starting to come up. The pricing is starting to go down. It's just like the stock market. You don't want to buy the stock market when it's at its high. You want to buy your stocks when the stock market is low. And the same dynamic is happening right now with real estate. And it's going to be really interesting. I don't think we're scraping bottom yet. I think we're still going to find some bottom, but it's a really good time to be buying housing. And so for us, although the economic climate seems a little bit difficult, we see it as opportunity. I mean, we are so excited that we're not going to have to go out into the market and compete with 20 buyers on a single home. We've actually got an opportunity to go in and negotiate pricing, try to get our best deals, because you make your money in real estate on the buy more than you do on the sell. And so we couldn't be more thrilled about the timing right now in terms of our short-term vacation rental investment fund that we've got going on. But we're also really excited about the markets we're looking at. And there's so many good markets out there. We're kind of honing in on 5 that we really like. We're really liking Maine right now. We're really liking parts of California. Not all of California works out. We're liking Washington. We're liking Oregon. We're liking Arizona. My home state of Colorado is a great place to be buying. And we're looking at one international market just because the returns are so good. So we're looking down in Costa Rica right now. All great places to vacation, all great investment opportunities. And we really like the returns that people are seeing on their investment. And these are markets that we're really excited to be going into.
Really broke that down well there. Less competition because there's less buyers at this point. Prices in many of these markets are still high, and with the interest rates, it's pushing people away. Over time, that may drop it and then have more buyers and more competition back up. Meanwhile, as you said, you're going to be able to get revenue during these periods of times. It's the difference from buy, fix, flip, and you're able to have that passive income all the way through. I love how you pointed out those 5 markets. I try to put myself, in the shoes of the listener, and that's the first thing I was thinking of. Okay, what different areas should we be looking at? So talking about Maine, talking about California, talking about Arizona, Colorado, being able to look at some of these markets. Washington, you had mentioned the international location. Are we already seeing prices come down? I'm so familiar with Los Angeles and Marina del Rey, some of these areas by the beach. I hear different things. I was actually at a blockchain real estate conference a couple weeks ago and hearing about what investors are doing and moving around. You talked about the timing. Do we have a small window or I've heard all these speculations on time, but are you already seeing this happen? And what's the timing that may be along with it?
So the answer is yes. I mean, if you looked at average sales price in, say, June as compared to now, it's gone down pretty significantly. And that's, of course, on a national basis. Some markets are going to do a little better than others, of course, and some are going to go down a little bit more, and some are going to rebound a little bit faster. It's just a lot of that's market driven, depending on where it's at. But right now, I mean, we're sitting in a place where they're still talking about maybe raising the prime rate up a little bit more. They're really working hard to get that inflation down. And in doing so, they're talking about raising rates again. I don't think we've scraped bottom, but every time I go into that MLS system and I'm looking for potential investments, I see price reduction, price reduction, price reduction. You never saw that when the interest rates were, below 3%, because there was so much competition for properties. There's no price reduction. There's 20 people putting in contracts on a single property, right? And now they're reducing prices. So again, I don't think that the price reductions have scaled exactly the same way as interest rates have gone up and pushed affordability down. I think people are still really trying to hold on to their values on their homes when they're selling it. But the problem is when you've got that much competition and you've got all that inventory and then you've got less buyers, it creates, we're going from a seller's market to a buyer's market. And will that last 12 months? Will it last 15? What will really probably likely happen is you're going to see interest rates get determined by what's happening with inflation. if in fact the Fed is able to do what they want to do and try to get that inflation rate going downward, they're going to keep pushing that up until they can have those impacts. But there'll be a point too where, if they do push, some would probably say that we're in a recession right now, but if they do push us to a point where we're into a little bit of a deeper recession, that might be the point when they start bringing the interest rates back down, right? To try to make sure the economy is starting to balance out. So to be in a really good cash position and going in and buying properties, if you're in a cash position to be buying right now, it's a perfect time to be buying. Setting that up, getting that low pricing as much as you can get on that lower end, and then going in when those interest rates start to press back downward and refinancing. It couldn't be a better position, especially for people who are in a cash position right now. And there's quite a few people in the cash position. A lot of people have been waiting for this economy, waiting for these things to switch back around. So it's here right now. And when people come to me and say, why would you invest right now? I say, are you kidding me? This is the perfect time to be investing in real estate.
Yes. And how have you seen the short-term rental markets change over the past few years? Have to ask, I feel like a percentage of my friends have become, Airbnb hosts or Vrbo or, whatever it may be, and buying in different markets, of course, since the pandemic started, but well before that, looking at these type of opportunities as an entrepreneur. How have you seen that change up competition over the past few years, or build up, other aspects that are beneficial towards the model?
Yeah, I mean, there's several dynamics going when you're talking about what's happening with the VRBO and Airbnb type markets, right? So, number one, they're expanding. They're doing well. They're growing. And why are they growing? Well, people just sat in their homes for how many years with a national and international pandemic, where we couldn't go on that vacation. We couldn't get anywhere. We couldn't fly anywhere. And so now all of a sudden we've got these freedoms and people are dying to get out. They're still wanting to travel. They're still wanting to get out.
Oh, yeah.
And the other dynamic there is, people, I've been at home for a while. I've been kind of in the solitude, and I'm getting back out, but maybe I don't want to go stay at that hotel with a whole bunch of people. We'll get a house. We can be near the beach. We don't have to be around a lot of people. It's really an interesting dynamic, and it's pushing people over into those Airbnb and VRBO markets. So interest rates, are they having an impact on people traveling? Not so much. I think the economy is still doing well. I think, unemployment is still very low. People are still making money. Affordability might be down on houses, but people are still traveling. They're still taking vacations. So we're maintaining rental rates, if not growing them, and then bringing the actual pricing down on the homes. And that's where we're seeing the opportunity to get the really good returns on this type of product.
Sure. And I could tell you, looking at hotels in some of these markets, Santa Barbara, different places that sell out, even San Diego, the whole county will sell out at times. The hotel prices have not come down whatsoever, and they get fully booked out. Short-term rentals are so attractive for so many different reasons. So to understand the business side of it is so fascinating. What would you say are the top 3 reasons that people are asking to invest into the fund? And for the past few years, you've been getting these type of requests. Why is it that you see these investors moving forward and getting involved?
Well, I mean, the one thing being that the stock market has been so unpredictable lately. So a lot of people have been pulling out of the markets. They've been putting their money on the sidelines, and they want it to be somewhere. They want to put their money somewhere. They don't want it just to sit. Like, with our fund, our target, so our fund is a 7 to 10 year hold fund because it is real estate. Yep. But our target IRR over that holding period that we're targeting out is 20% annually. So somebody looks at a fund like ours and goes, geez, I can sit it in my savings account and get minimally nothing, or I can put into a fund like this, the lower risk because it is real estate. It's, we're backed by real estate. It's different than a stock. Like I could get up tomorrow, I could have however many shares of a company, and I could get up tomorrow and they could all be gone. They could go to zero. Real estate doesn't go to zero. It can't go to the day that real estate goes to zero will be the day the earth implodes, because you just can't. A house could burn down and you've got insurance, and if you don't have insurance, you still have land value, right? You just can't get to zero with real estate. So there's a lot less risk to it. But risk, there is the fluctuations in the market, just like everything else. Real estate has its cycles. It has its up cycles and it has its down cycles. We just are really excited because we're kind of heading that down cycle, right? If you could have bought real estate back in 2008 and 2009, that's when they had the big bank crisis. They shut off lending. It was a really, really tough time. And what happened is real estate values collapsed. I mean, they went down, the bubble burst. You had all that subprime lending going on, a lot of issues. I can't even tell you how much workout property there was at that time. But if you would have invested $1 million into real estate then in, say, 2009, 2010, and then you would have sold at the top of this, even the cycle where it's at now, even though it's declining a little bit, you would have made so much money, it would have been ridiculous. That's the game. The game is trying to make sure that you're buying when you're in those down cycles and selling when you're in that up cycle. So when a lot of people are looking at this fund and they're identifying the fact that we are going into a new cycle and that creates opportunity, that makes this fund really attractive to people. And, I'd like to say that it's because I was so brilliant in my timing when I was setting up this fund, but it's not true. We got very fortunate and lucky in time. I couldn't be more excited the fact that I'm sitting here going into a down cycle, getting ready to buy our real estate. I mean, it's just a perfect place and a perfect set of timing and just a perfect opportunity.
Buying in the down cycle, less risk than other types of investments, especially the stock market, early stage private equity, tech. There's just so much more stability. And also the IRR that you're mentioning, 20% annually, huge. What about buying? You mentioned how a good deal is all about a good buy. Do you have different sources for the investor acquisition side? I know this is a big appealing element of what you do. Is essentially I, as a viewer of Urban Conversion, can now buy alongside Rodman. I could be part of this and participate in the passive revenue as well as the appreciation of the real estate over that 7-10 year period of time. Can you speak to anything about the acquisition side?
Oh, absolutely. I mean, the thing about it is, there are different types of investors. And, our team, what makes us a little bit different is that we're made up of valuation professionals. So I was the president of the Appraisal Institute nationally last year. I come from the valuation background. Everything that I do is steeped in really strong real estate investment fundamentals. We want to make sure that when we're buying it, we're looking at every aspect of that cash flow. And I'm very conservative in my modeling. I kind of grew up conservative, and the way that I look at properties, I want to make sure that, if it comes to revenue, I'll conservatively estimate the revenue. If it's a vacancy, I'll add in more vacancy. Even the interest rates, and this is just sheer luck. It's not brilliance, but when I did my modeling on our cash flows, back when interest rates were under 3%, I plugged our interest assumption in at 6%. I had doubled our interest, and now we're at almost 7%. So we're almost a little bit above what my modeling was at that time. But the fact of the matter is, it really didn't impact my cash flows that much because I had already conservatively modeled in that higher interest rate. So we look at the fundamentals. We want to make sure that what we're getting is fundamentally solid, that we're going to get the returns that we want, that it's going to get the cash flows that we need. And the other thing that we are so happy about is that a lot of equity funds will come in and say they buy an apartment complex. Well, we're going to buy, we need $50 million in revenue. We're going to buy a $200 million apartment complex. And as that cash flows, we're going to give distributions to our investors. But what happens if that one asset isn't performing? Right? I've bought that asset. I've bought into that asset for 7 to 10 years. It's going to sit there. And if it's not performing and getting the returns that I want, I'm kind of stuck in the asset. With short-term vacation rentals, we're buying a portfolio of assets. It's multiple properties. It's not just a single property. So every single month, we're looking at the income dynamics of those properties. We're seeing how it's performing. And if we have something that's not performing in the portfolio, we can sell it. And then we can put in another property that is performing. And so it really helps us reduce the risk there. So when we're looking at these things, again, we're dissecting these incomes down to the most minute level that you can imagine, down to the penny on what we think we can get in returns. We don't even look at anything. If we don't think we can get a cap rate would be the cash on cash without any lending in place. But if we can't get in at a cap rate of 11%, we don't even look at the property. It's got to be something we think is going to perform over 11 on the cap. That's the way that we're going to get that targeted IRR over the holding period of 20% plus.
And like you said, you're projecting conservatively. Hopefully it comes in an even stronger, more favorable numbers than that. But at least if it's at that cap rate of 11% or better, you're in a good place. And I relate this optimization process, by the way, with advertising, with marketing that we do. We're looking at variance of audiences, we're looking at variances of messaging, of funnels, reallocating, putting efforts and more focus towards where we're seeing the best results. It sounds like that's what you guys are doing, where you're looking at the portfolio, have all your eggs in one basket. You're able to kind of remove, sell, exit the underperformers over time, find more of the properties that are working, have that diversification. I can only imagine how much time that requires for your team, which is doing this all the time. And in comparison to an individual trying to take these steps, let's say it's for the first time or just in general doing it on their own, massive value add just by being part of the team.
Yeah, and you're right. You do the exact same thing. I mean, you've got a bunch of ads that you run, that you do testing on, and you want to see what the returns are going to be to that effort, right? And if the returns to those efforts aren't there, you pop that one out and you try another one, right? Yep. Until you get to that optimal piece that you have, that you can put, that you're capitalizing on, that your clients can be successful with, that you can be successful with. That's the way that you should be doing things. If it's not working, know when to pull the plug on it and put something else in there that is working. And then once you find that thing that's working, like when we find a market that we really like and that's getting the returns that we want, and we're going to throw that fuel on that fire, we're going to double down on that market, and we're going to make sure that we go in and get our buys done so we can get the returns that we're looking for on those investments.
Always have to be looking at a way to see where the performance is, gravitate towards it, the benefit of the portfolio, the benefit of being part of this larger group versus operating a small group or even as an individual. Big fan of that across the board, and enjoy the entrepreneurial path that you took to get here, and think you're saving listeners a lot of steps by getting to hear about your insights. Do you have any recommendations in terms of what audiences that are tuning in right now, whether they're a VC industry professional, even an investor, whether a marketer, a founder, that they could test out for their own models, for their own real estate holdings, or just their overall entrepreneurship path? What are some things that either you tested or just approaches that you would recommend to others?
I guess the first thing would be, don't be afraid to fail. I mean, everybody fails. I get asked all the time, how are you successful at everything you do? And I go, man, because you have not seen how all the sausage is made. There are so many times when you're out there and you're doing things that just don't work. And that's okay. It's okay when things don't work. It's okay as long as you take it for what it is, as a learning opportunity, figure out what went wrong, what went right, make the tweaks, and then be able to move forward into the next thing or into the next pathway or the next marketing piece or whatever it might be. So many people want perfection, and that's hard for me to say because I'm a perfectionist. I know a lot of people, especially some of my friends who might be listening, go, dude, you're the biggest perfectionist I know. But I'm not perfectionist enough not to try things. You know what I mean? You've got to at some point just go, you know what? I'm going to put this out there. If it works, it works. If it doesn't work, it doesn't work. We're going to learn from it. We'll just put out the next thing. It's okay. Nothing's ever going to be perfect. Life is not perfect. Entrepreneurship's not perfect. Business is not perfect. You got to be willing just to take the risks, figure it out, and then move on. But not everybody's built like that, Jason. I mean, there's so many people out there that don't have that entrepreneurship in them. where, and life needs everybody, right? Life needs that person who maybe doesn't want to be the entrepreneur, doesn't want to take the risk. Maybe wants to have somebody, writing the checks to make sure that, their job is secure. That's awesome. That's perfect. But as an entrepreneur, you got to be a little bit aggressive. You got to take chances. You got to learn from those chances. You got to build on those chances. I can't even tell you how many times I've just shaken my head and said, God, that was a dumb idea. Or I don't know why we tried that. But at the end of the day, I've won big more than I've lost. Right. And so, and that sounds like a real poker mentality, which it's not. I don't mean it to be a poker mentality, because there's a big difference between taking calculated risks and then learning from risks. But if you take zero risks, there's going to be zero reward. Every single day, you'll get nothing back from nothing. So, you just got to go out there, put in the efforts, see what's working for you. And then the other thing is you got to make sure whatever you're doing, it's got to be aligned with who you are personally, right? I've got 4 check boxes in life, and anything I do, they have to check all 4 of those check boxes. Stuff that's important to me on how I want to live my life, what I'm about, what I believe in. And I get opportunities all the time. People bring me stuff all the time saying, hey, will you invest in this? Will you be a part of this? And it's so important to be able to say no. And the best way to say no is if you've got those things that are aligned with you, and you've got check boxes where you go, if it doesn't check a single box, it's gone, and you move on from it. And you focus on those things that you really, really want to be doing, that you want to get up and be doing. Because there's so many entrepreneurs too who look at a video and go, well, it doesn't matter what I do, I'm an entrepreneur. And then they'll plug in something that maybe doesn't align with them or fit with who they are, right? That's the surest way to fail. Because if your heart's not in it, if you're not in it every single day and feeling it, I mean, I don't even know how many hours a week, a lot, right? But it sure doesn't feel like that. It doesn't even feel like I'm hardly working. It feels like I'm just doing what I'm enjoying doing. And that's what alignment's about. And once you get your passion aligned with what you're doing and your mission, you're going to be unstoppable.
Powerful words here, Rodman. I haven't heard it broken down like this before. And it brings so many other quotes to mind. One that I've always latched on to is the most successful people, you can't tell whether they're working or playing. They're just always going after their vision of perfection. I hear that's what you're encompassing, what you're striving towards. I also point one out of you can't be an expert at something until you've failed at it every way that you can. And maybe it's calculated risks, calculated failures. Like you said, if you're able to check some of those no boxes, you don't need to go down that path and have that failure. You can put your time, the most precious resource, towards these other ideas, towards these other tests to get you where you need to go. But to be able to hop from one failure to the next, whether it's a property that, like you said, slightly underperformed and others are driving at higher levels, or whatever it may be, to be able to hop from one failure to the next with learnings, optimistically stronger towards the next route. And that's difficult. It's difficult to do for yourself, I've found. It's easier for me to do consulting or share with others. It's difficult to remember when I'm actually going through it at times. And I try to focus on productivity, optimization. You're given a lot of great ideas here. Are there any other models that you guys use or yourself towards optimizing, towards figuring out why something failed and how you're going to physically improve it?
Well, I will say that analytics, KPIs, metrics are critical in every single business. I don't care what you're doing out there. If you cannot measure your results, then you'll never know if you're succeeding or failing. You've got to have some sort of a metric system in place where you can go in, you can get a snapshot every single morning when you wake up, where you're at, what's not working, what's working, what do I need to make better, where are my operations failing? I mean, I can't even tell you how important KPIs are. And I found KPIs probably about 10 years ago. And it might have been a little bit longer than that. But anyway, to integrate those KPIs was life-changing. That's how you optimize. Because if you don't know what's going wrong, how do you optimize them? If you can't look at something and go, that's not working, how can you make it better? Right? So for anybody who's got a business out there, and it doesn't matter what business, there's KPIs in everything in life. It doesn't matter what it is, whether it's your personal life, it doesn't matter what your business is. Every single business has a set of metrics that tells you if you're succeeding or if you're failing. And so in terms of optimization, I would say make sure that you understand metrics, make sure they're visible, make sure when you get up in that morning, you understand what's working and what's not working. Because the only way that you're going to be able to optimize is by understanding those metrics and then doing a deep dive to go, okay, this isn't working. What do I need to change to make it better? What do I need to tweak to make it perform better? What do I need to model differently to make it optimized, to give it that whole optimized performance? What do I need to do? Without KPIs, you're guessing. And when it comes to optimizing, there's no guesswork in optimization.
And it can be confrontational. And I think that's what makes so many people shy away from numbers. Meanwhile, numbers are the only way to measure anything. You know, you could use adjectives, you could talk about how great something is and throw tonality into it. But the numbers say something that's inarguable. And being able to have those key performance indicators, waking up, looking at them. I think of the car dealership, and at the end of the month, here's our numbers, and it's a brand new business the next day. Having that type of mindset for yourself, the accountability, and being able to use that and let the metrics show what's working, what's not. Anything before those charts are just assumption. Once you're actually seeing what's happening, you're able to build off that. And I think your numbers speak very loudly. And getting to scale a little bit, over 30 billion in real estate valuations, over 25 businesses acquired and sold, over 30 Telly Awards. These are strong numbers. It says a lot. It is social proof in a quantitative state. How have you been able to scale? How have you, I imagine relationships, finding the right projects, but what have been the keys to scale for you?
Well, I mean, all those achievements and those accomplishments come with a lot of tripping and stubbing my toe along the way too, right? I mean, that's kind of why, when you optimize, and you continue to optimize, you'll get to those points where you'll have achievements, but for every award that sits on the back shelf there, there's been three or four times the failures along the way, right? Which is fine. That's just a part of it. But scaling, there's a lot of different ways to scale business, and every business can scale differently, right? And some businesses are more difficult to scale than others. So to give you an example, my wife, we have a flower farm here in Colorado, and so we're on 3 acres, and she spends a lot of time out in the fields, planting the flowers, growing the flowers, taking them to market, doing everything that she can. But in that business, there's only so far that she can go by just planting a flower, picking a flower, and selling a flower, right? The scalability comes into the building of the brand where, okay, well, now she's going to start an educational program to teach people how to plant a flower, grow the flower, pick the flower, or she's got a line of products that she can develop out of the oils that are coming out of the flower. So her scalability might not come in the fact that she is planting a flower, but the scalability comes out of a whole different set of concepts, which is more scalable, because there's some things that, how do you scale it? How can you scale it? Sometimes you can't scale it. But once you do find the scalability and you've tested it, so you've gone through the process, you've optimized it, you've tested it, you've optimized it, and now you're getting to the point where you're going to scale. Once you find the thing that you can scale, that's when you really do that big push. That's when you really go out there and push that one thing forward. Because what you have is you've got proof of concept. I mean, after you've done your testing, you know what's working and you know what's not working. So the scalability comes on the side of, okay, now I know this is working. Now that I know I've got proof of concept, now I can scale that. but you need to be really selective on what you're scaling, right? Like I said, some things you can't scale at all. But find the thing that works best for you. Find the thing that's in your niche that you love doing, that you're getting up every day, just so excited to get into and work with, and then figure out monetarily. And it's not always about the money either. You know what I mean? Sometimes money can come second. Sometimes it can be totally off the table. I tell you, most things I do aren't even about the money. It's just about the giving back, or the putting into, or the building part. And the money always comes, right? The money always comes. So anytime people put a KPI on the money, I always go, put that last. Make your KPIs based on things that are really going to make a difference for people. It's going to fix problems. It's going to help people move forward, and then scale those things. And the money will always come. I guarantee it. Your giving window should always be wide open, and you should always be pushing as much into the world as you can without a single expectation. And I guarantee it's going to come back in. But the scaling part, scaling's a million different things depending on what you're doing. But the key is finding something that is scalable, number one, making sure that you've got the proof of concept, making sure that it's working, and then just lean into it. Lean into it and go with it and go with it and go with it until it just doesn't work anymore. Because that could happen also. But once you find it, once you've tested it, optimized, and you find it, go with it, flow with it, throw the gas on that fire, make that thing go.
Selectively scale once you find it, once you get it, once you know it's making a positive difference for people. Don't be too focused on the numbers. They will be there if the value is there for the people. The monetization side, it's really to follow the value that you're putting over once you've found that proof of concept.
100%. And you've got to approach, when you're an entrepreneur, you've got to approach life from a place of giving. Right. I mean, you see it all the time. Like you go to your LinkedIn and such, and people are just coming in, they're just selling at you. They're just selling at you and selling at you and selling at you. But the thing about it is I think when people discover that if they are approaching life from a place of giving without any expectation of getting back, and I do this all the time, and a lot of people go, yeah, whatever, dude. That's your foo-foo concept of business. But I'm going to just tell you that I have had more success in just helping people because it always swings back around. It always comes back to you every single time. I've benefited so much more from just being in a place of giving. When I'm making that first contact, when I'm building that first relationship, I don't come to them and say, what can you do for me? I always go to them and say, how can I serve you? What do you need? How can I serve you? How can I help you? How can I help you grow? What does your business need? How can I connect you to the right people? Every single time. That's number one in every single relationship. And I guarantee you, if more people did that, they would have returns like they had never seen before, because it's incredible what comes back to you in life.
Rodman, couldn't agree with you more on these points. I know listeners are getting a lot out of it. Want to begin to wrap up the show here and ask you, what are your final thoughts that you want to leave listeners with? And if they'd like to get in contact with you, if they'd like to learn more about EvolveX Capital, what is the best way for them to do so?
So they want to get a hold of me. There's a couple places you can go to. We do have evolvexcapital.com. And then we also have, I've got a website called gorodman.com. And I named it that because nobody can seem to spell my last name. So Go Rodman made a lot of sense. But you can kind of learn about what I'm doing, what I'm about, learn about our investment fund. If you'd like to look at our private equity fund, we're really excited about that right now. But more than anything, if you just want to connect and reach out to me, I'm a collaborator, man. Anytime I get a chance to just talk to people and work with people and lift people up, I take that opportunity every single time because, life is short. And I've always kind of felt like, we're in these three phases of life. Phase one, you're trying to figure it out. You're trying to learn what you're doing. You're trying to figure out what I want to do and how I want to do it, and you're not quite certain on how to get there. In phase two, you figure it out a little bit. You get it into your soul. You understand it. You understand process, and then you've got this stage three where it's sending that information back down. And I feel like I'm in that phase three of life right now, where I'm really enjoying sending my entrepreneurship ideas and helping people and empowering people and trying to move them forward. That's the whole EvolveX. That's what EvolveX is. It's evolving exponentially, personally and professionally. If the internet, I don't want to date myself too much, but the internet wasn't around when I was, in my 20s. So I couldn't just make national connections. I couldn't just go Google information. It was going and getting information from books or from teachers or from mentors or whatever we might have had at that time. But right now we've got this incredible opportunity to evolve exponentially, because we've got at our fingertips so much information, so much power, so much education that we can have. And so what I want to be doing is I want to help people evolve exponentially. How can I help you take 5 to 10 years off of your learning curve? How can I be a part of your growth? How can I pass this information back down? So feel free to reach out to me. I'd love to collaborate with you, hear about what you're doing, talk about what may be going right, what might be going wrong in your life too. But those are the places that you can find me, and I always enjoy meeting new people.
Awesome. Well, Rodman, thank you so much for making the time to hop on today. I'm a big fan of everything you're doing, the fund, EvolveX Capital. It's a pleasure to be able to share this with the audience here. So I want to thank you for hopping on.
Yeah, thank you, Jason.
And want to thank everybody for listening. We'll see you on the next episode. Take care.